Welcome to AFO Wealth Management Forward, a podcast powered by Arrowroot Family Office that's at the intersection of accounting, wealth management, behavioral finance, technology, and entrepreneurship. We help accounting firms and financial advisors grow their practice by going beyond the numbers as we learn from industry leaders and subject matter experts to discover the secret to their success. A podcast that highlights everything from the transformative power of AI to embracing the human-first approach of behavioral finance to help you understand the psychological and emotional relationships to money and meaning. Here is your host, Rory Henry, director at Arrowroot Family Office and author of Holistic Guide to Wealth Management.
All right. Hello, everyone. I have another great guest joining me today. He's a certified financial planner who went from advisor to New York Times columnist as the creator of the beloved Sketch Guy series. He's the founder of the Society of Advice, where he helps advisors focus less on the numbers and more on meaningful conversations, and the author of the new book, Your Money, Reimagining Wealth in 101 Simple Sketches. So without further ado, let me welcome Carl Richards. Carl, welcome to the show.
Thanks, Rory. Really excited to have this conversation with you.
Yes. Thank you for coming on. Well, let's dive in here because I know you've talked about this book really being a conversation grenade. Can you talk about for our audience why you chose that phrase and what you're hoping happens when people read the book?
Yeah, I mean, I had this experience where I was sitting across the table from some really smart, successful clients, and I was trying to explain a concept to them that I was just getting blank stares back. And it was the first time that it dawned on me, like, wait, they're really smart.
Yeah.
It must be my problem, and out of an act of desperation, I did something I'd never done before. I stood up at the whiteboard and just was like, no, like this. And I wasn't a doodler. I have no art background. Like, I just made an attempt, and they were like, oh, I get it now. And that started this little path of trying to take complex financial concepts and reduce them down to a simple sketch. And that ended up in a newspaper, and that column ran for 10 years. And I started getting these emails, and these emails would say something like, hey, I printed out your sketch and I put it on the bulletin board in our break room, and you wouldn't believe the conversation that started. Somebody would say, I taped it on the fridge at home and my son asked me about it. You wouldn't believe the conversation that started. I started thinking about, like, look, the sketch is really just our conversation starters. And that's really what led, my two previous books, my last one was 11 years ago. And I was like, I don't want to write another book. But I kept getting those notes around starting conversations. And so I don't really care about the book. What I care about is that the book is just a means to an end. And the end is, the next step in that process is having conversations about money. The end really is more alignment with our use of capital and what's really important to us. And that's a never ending process. But really what I wanted the book to do was start conversations. So that's why I started using it as, like, toss it in a room and conversations break out. And that's why I called it a conversation grenade.
Yeah. Well, speaking of sources of capital, let's dive into the sketches here. And if you're listening on audio, I know you do a great job, Carl, of explaining the sketches, but I'm also going to have our editing team actually put up the sketches so people can view it. Perfect. I'll put that in the show notes there. But let's dive into the four sources of capital sketch, because I talk about return on relationships, advise Roar, many times, directing our attention, which is a form of capital, is really, the outsized impact we can have on a return on those relationships is by investing our attention. So can you, break down that sketch and why you think attention is crucial here?
Yeah. So we tend to focus on money, right? Like, when we think about making financial decisions, it's always about money. But that sketch is just a bar chart. For those of you listening, just imagine a bar graph with 4 bars. And I actually spent a lot of time trying to decide which one should be bigger or smaller. So they're basically, just pretend like they're randomized, but they're really close to one another. It's so funny. I find you have to be very careful about what will prove to be a distraction to people. So just pretend like there's 4 bars that are basically the same height. One's a little taller, one's a little shorter. It doesn't matter which one's taller or shorter. One's labeled money, the next one's labeled energy, next one says time, and the last one says attention. And that's meta as a mnemonic or whatever we call those. So money, energy, time, and attention. And my belief is, my thesis, and I could be wrong about it, but that real financial planning is the alignment of your use of capital, those four sources, money, energy, time, and attention, with what's important to you. If we had a Venn diagram, one circle would be use of capital and the other circle would be what's important to you. And we want as much overlap as possible. Well, one thing that really struck me recently is how important attention is. And I love that you cued in on this, because all the richest people on the planet right now are not titans, are not railroad titans.
No, they're the tech titans.
They're sellers of attention.
Yeah.
Right. Largely they're monetizing. And so I don't know what that means other than it must be valuable. My attention, our collective attention must be valuable. And the reason I think it's valuable is I think, and you pointed to relationships, the currency with which we pay for or invest in a good relationship is attention. I think there's this idea of like, pay attention.
Yeah.
You pay for a meaningful life. And here's the example I would use. You know, I live in Park City, Utah. We ski a lot. I could take my kids were all just here for the holidays. I could take them skiing. And let's just say I take one of my daughters skiing. And it's going to cost me a lot of money, that's for sure, because skiing costs a lot of money.
Yeah.
It's going to take energy. It will certainly take time because I'll be there. Physically, I'd be there. But I could not be there at all. Like I could be as overtly as looking at my phone, but even if I wasn't looking at my phone, I could be paying attention. I'm telling you right now, my daughter would have a different experience if I invest my attention versus not. The lever on that experience is literally attention. Yeah. And I would say that's certainly true with relationships and with time. And so thinking really carefully about how we invest, what we pay attention to, I think is a really important factor in this whole like financial planning conversation.
Yeah. I mean, speaking of tech titans, it's just, I mean, they are monetizing our attention, and, you know, they're using the product really to have having the comparison to others. And I know you talk about some other sketches there. You have some other sketches there where we're, you know, comparing ourselves to others. You know, and I think they're hijacking the system here to have us buy something to make us feel better about who we are.
Yeah, that's for sure. There's one conversation in the book around carefully cultivating your comparison set.
Yeah.
And I think that's really important. I mean, I when I grew up, you know, like the kids in my neighborhood, we all had dirt bikes, little BMX dirt bikes.
Yeah, the goodies. I was the goodies generation.
Yeah, and I remember wanting a slightly better dirt bike, right? But I didn't know that I was supposed to want a private jet. And now I do.
Now you
know, because my comparison set back then, because the comparison machine of Instagram didn't exist, right? My comparison set was my little buddies in my neighborhood. And so I think you have to be very, very careful to cultivate that. Who are you comparing yourself to, and why, and what's the purpose? Do you really even know the truth? My wife said to me the other day when I was complaining about something about my life. I was like, oh, it's so hard. And she said, you know, if somebody followed you around and took pictures of the highlights of your day and put it on Instagram, you would be jealous.
Yeah.
You know, so we don't even know the truth behind these stories, but I think the real point is just be very careful about who you're comparing yourself to and why.
Yeah. It's so funny. I don't know which Instagram or TikTok clip it's from and who talks about it, but they say that, you know, many times we're complaining about the person that we hoped we would become years ago or decades ago. If we would have told ourselves, you know, we would have X book or done this or accomplished this goal, we'd be absolutely ecstatic. And now that we have it, you know, we sometimes complain about it.
Yeah, totally. I can't even. I would have never even dared set a goal of many of the things that have happened in my life. And I often wonder what the lesson is there. And I think the lesson largely is like just wake up every day and ask myself what's to be done next,
Yeah.
and get a lot of joy and satisfaction whenever I find myself, feeling bad about it or complaining about it. I just need to remind myself, I thought that was so fun. I can't remember who did that comedy skit about airplanes. Just like, dude, you're
Yeah.
going 500 miles an hour at 30,
Yeah.
whatever
Yeah.
that was.
Right.
Like you're complaining about the food,
The food, yeah.
whatever. So yeah, it's really interesting.
Well, I mean, I think that other sketch that I really enjoyed is the enough is enough, because
Yeah.
you have the picture of, is this enough? How about this? About this? Is that a way to kind of reframe, our thinking to like, okay, well, what is enough for us?
Yeah, I had this great on my podcast 50 Fires. I had this great conversation with Krista Tippett that she's been, podcasting for whatever since podcasting was invented before, right? Like
Yeah.
when it was just radio. And she's had so many meaningful conversations. And I asked her, how would you define enough?
Mm.
And she actually invoked Rilke in the Letters to a Young Poet. She just said, you know what? That's a question I'm going to live with for the next year.
Mm.
I think that's the way to think about enough is it can't be a number.
Yeah.
It can't, because if it's a number, I promise you when you get there, it will not be enough.
Never enough.
The answer will always be like, how much is enough? A little bit more than I have.
Yeah.
It's got to be something else. Enough can't even be a destination. I think it's something you have to actually be. It's got to be a way of being.
Yeah.
And that's a different set of work. Like money can't solve the enough problem.
Yeah.
Right? Money can't solve it. And so if we give that job to money, we'll get to the top of the mountain and find out it's just a void. And so I think starting to lean into the idea of like, what would it mean to feel safe and secure? What would it mean to be enough? What would it mean to always not going after the next thing, the next thing, the next thing? Because that's a hollow pursuit. And everybody who does it says the same thing. But we all say, oh, I want to try that problem. Right.
But we all have to go through it, right? To eventually,
I think
it's
that's true.
hard. You can't not,
Yeah, I mean, I think the questions are more like, what really matters to me?
Yeah.
What relationships do I care about? What experiences can I have with people that I love? What am I doing that gives me a sense of craft, meaning, or purpose? Like those are the questions that get us closer to enough, not like how much is in my bank account.
Yeah. Well, let's go into maybe some practical ways we can do that then here, Carl, because I know you talk about spending and how it's our most frequent interaction with money. And many times it's wrapped in shame, but this can become a clear path to actually what we care about. So can you dive into, spending in maybe one of the pictures here?
Yeah, I think of, I love to think of this as the spending practice. So it's like, I think we should be world class at spending.
Yeah.
Should be the best in the world. And the way you get there is by practicing. And what I mean by that is, instead of, and what you were referring to is, I want you to imagine a friend and it was your first friend. So you met in pre-kindergarten, right? Like, and it's still the friend you see most often. In fact, you see them 3 to 5 times a day. And every time you see them, you leave feeling bad about yourself. Right? Like that is spending's relationship to money. Like it's for most of us, it's the first interaction we have with money. It's certainly the most frequent, 3 to 15 times a day, right? And every time we do it, we either feel bad or we feel apathetic. Like you may have gotten to the point where you don't even like, there's enough money, who cares?
Yeah.
But either way, apathy or indifference or feeling shame or blame, not a good way to have a relationship. So instead, I just think like, man, there's 3 to 5 times a day
Opportunities
where I could practice saying, hey, is this aligned with what I want? And the simple way to do this without a lot of heavy, like it doesn't need to be heavy or carry a notebook around, or like, what if you just said, and this struck me once when I was at Jimmy John's getting an unwich, a number 9 unwich. I realized I'd gone there a handful of times over the last couple of months, and I was leaving and I realized if somebody were at the door and they asked me how much I just spent, I wouldn't know. It's like, I knew it wasn't less than $5 and I knew it wasn't more than 20, but I didn't really know. And I was like, that's interesting. So the next time I went, I just remember saying something like $9.97 for an unwich at Jimmy John's.
Yeah.
And then I would just say, isn't that interesting? And just start and my thesis here, and I might be wrong, but my thesis is You want all the benefit of budgeting. I think you can get 90% of the benefit of budgeting by just simply noticing every time you spend. Don't even have a goal of changing the behavior. I didn't have a goal of buying less Jimmy John's. Like, it just, my thesis is awareness will drive behavior change, especially if behavior change is not the goal. Right? So you'll just start to notice, like, man, going to the movies, I thought that was something I loved, but it turns out I like going on a walk with my friends more, or vice versa.
Yeah.
And just noticing, because what we want is we want to spend extravagantly to the degree we can afford it on stuff that brings us happiness and joy. And we want to cut ruthlessly on the stuff that doesn't.
Yeah.
It's just so often we're confused by the difference.
Yeah. I was talking to somebody about the importance of trips, especially in childhood, and those memories are something that lasts a lifetime. And I know you've talked about how trips many times, they can become mentally ruined because we track every dollar, and we plan this perfect trip, but then we're filled with angst because we feel we spent too much. Can you talk about maybe that anxiety and how we can kind of reframe it?
Yeah, I mean that I like to think of this as like getting full value.
Yeah.
Right? Like, if I'm gonna go on the trip and I've paid for it, why not get full value, right? Like, don't spend the whole time being like, oh no, I can't believe you're going. Like, I think of it as like, if and I remember doing this. I remember being on trips with my family and being like, oh, we can't get that, or even some underhanded comment of like, yep, that more money. Like, just make a decision, have a budget, be thoughtful and careful in advance, communicate that with the family, and then enjoy it, right? Like, I remember going on a trip where, and so actually somebody was telling me this story. They were like, yeah, it was our 20th or 25th anniversary. And he's like, for the first time, I bought a first class tickets for my wife and I for the first time. And then we got on the plane and I was like, I can't believe we're sitting up here. And I was like, dude, you spent the money either way.
Yeah.
You know what I mean? Like, I love the idea of just like get full value for those experiences.
Yeah. Yeah. I love it. All right. Well, shifting topics here a little bit. I want to talk about, I love the sketch, is the incremental change, because, and we'll obviously put it on the video here. I think it's important to really show how we can compound our actions by just understanding, put one foot in the front of the other. And then when we look back, we see this huge change. So can you maybe talk about, incremental change here?
Yeah. So I'll tell you a story real quick. And I think it's the story that's in the book. I remember we used to ride road bikes pretty competitively when we lived in Las Vegas, and we'd go on a ride every 3 or 4 times a week, and there'd be this big group of people that would meet, and new people would show up. And I went through this, and everybody who shows up goes through this. So this new guy, a friend of ours, showed up named Brad, and I remember once I had a couple of years under my belt, and it was no longer me. I remember just sort of paying attention to, because we would leave, and all of a sudden it would be sort of game on. We'd be going really fast. And for people who were experienced, it wasn't that fast. But when you first show up, you're just like, and you'd kind of keep track of how long they made it before they got spit off the back, is what we call it. Like, once they're no longer with us anymore. I remember Brad, it was like, there was one hill going out of town and he didn't make it to the first hill. And I didn't either the first time, right? Second, third time he didn't make it. And I just remember, and we would ride up to this really long climb, this really steep climb on a bike. And Brad would fall away and I would fall away, and I remember, though, a couple years later, looking over at the top of the climb and being like, Brad, you're still like, you got, and he was like, yeah. I was like, no, don't you remember? Like 2 years ago, you didn't make it 2 minutes out of town. And I just remember thinking it doesn't feel like much at the time. And the sketch is sort of like one of those hockey stick bar charts, but it's stair-stepped. And there are some steps where it goes down and some steps where it goes over. And the caption is measuring the whole improvement. And it says something like, it didn't feel like much at the time, but this was massive improvement.
Massive improvement, yeah.
And James Clear's works made this very clear to all of us, right? Like, just stacking, repeated boring behavior consistently done over time produces massive results. And I actually have begrudgingly accepted the fact that I'm not sure there's any other way. I'm not sure, because I used to think like massive revolutionary change was all I was about. And then I kind of realized like, well, it sort of didn't work. What worked was consistent, small little things, stacking habits over
Yeah.
time. So yeah, I think whether that's $25 a month when you're 18
Right.
or getting up every morning and writing 500 words, like it doesn't really matter what it is. It's just consistent over time.
Yeah. And that makes me think of the outperform sketch, outperforming your neighbors, where it's just average investments, good behavior, and you can outperform, 99% of your neighbors.
Yeah, yeah. That's an old one and one of my favorites. And I don't like I'm always trying to be careful of like I don't know if it's 99%. I don't really care. We shouldn't get distracted by it. But it's most of your neighbors. I just remember having this conversation with it was like it happened over a series of a couple weeks. I had the same conversation with people that were just, in their late 50s, early 60s, saying to me things like, man, if I could just, I would trade my investment experience for just having all my money back.
Hmm.
Right. And I was like, wait, this is during a period of time where the stock market's done incredible. I remember one of those was, man, I wish I would have bought more houses because my house was my best investment. And we went and looked. We actually went and looked. His return on his house was 3%, but it was the only investment he had held for 30 years.
Yeah.
Right. And so I just remember thinking like, if we just do boring things, the last story around this, in the same time period, I had a client come in, he was a new client, and he had turned a small, really modest inheritance, like a $10,000 inheritance, which is a lot of money, but
Yeah.
that small little nest egg. And he turned it into close to $100 million worth of real estate. And I remember
Wow.
saying to him, I was like, what in the first meeting, I was like, what's the secret? Because I knew a bit about he and his family. And I was like, what's the secret? And he was confused. He was like, what do you mean secret? And I was like, well, you've managed to turn this really small inheritance into this huge real estate portfolio. And he's like, there's no secret. He's like, I bought really boring things and paid them off over 30 years.
Yeah.
And so I think if we just do boring things and behave well, we'll outperform 99% of our neighbors. Now, all those neighbors are waving their hands about little, along the way, like, oh, this crypto thing, or this
Right.
restaurant I invested in, or this. And they're flashy and they wave their hands. But, it's like the old saying, right? It's the tortoise that ends up winning the race.
Yeah. And I talked to a number of folks on the podcast. Dr. Daniel Crosby, he says, we as advisors are really there to prevent clients from making 3 to 5 catastrophic mistakes.
Yeah.
I know your sketch, you have your advisor, and then the big mistake, and your advisors in between those two. And, that's really what we do, I think, as financial professionals, is helping people, prevent them from making those big mistakes.
Yeah, I just think getting something, I mean, that sketch was originally drawn about me. So it originally said me, something stupid. and no, me, my advisor, and something dumb, right?
Yeah.
It was like I wanted something between me and dumb. And I, of course, would never use that language about anybody else. So that's why I changed it to the big mistake. But we just need to realize we're sort of hardwired to make mistakes when it comes to specifically around the investment process, but also around budgeting and spending. We're just sort of the things that have kept us alive as a species are working against us. And so it's totally expected and normal to make those mistakes. It doesn't make you dumb. It makes you human. And I think the solution to that is to realize that as early on as possible and put guardrails in place to just prevent yourself. And one of those guardrails is third parties, because one of the big mistakes we often make are just not being aware of our own blind spots. And Rory, the most profound thing you'll hear all day is that the funny thing about blind spots is you can't see your own.
Can't see your own.
Right. And it takes somebody else. So I don't care, a father-in-law, an advisor, a document, a journal, often just journaling and then going back and reading it again. But whatever you do, just make sure you have something that will expose you to those blind spots for sure.
Yeah. And it goes back to, and I know you talked about enough. And I think we focus so much on, our investments or driving more income, but as you outline in many of your sketches, it's gratitude, and that can have an outsized return, as much as an investment portfolio or as much as getting that raise is being grateful for what you have and saying, hey, I have enough.
Yeah, I spend a lot of time thinking about that idea that maybe the secret is not getting more. It's just practicing being grateful for what I already have.
Yeah.
And that's one of those incremental things that's like so simple to say and so hard to do because our everything around us is not wired that way, and sure, I want to be striving and I want to have
Yeah.
goals and I want to keep growing. And I think this is one of those competing truths. Like, this is a good example. My relationship with my wife has never been better. We've been married over 30 years. It's never been better. And I sure hope it's a little better tomorrow.
Mm-hmm.
Right. And the day I stop saying that, I don't ever want to stop saying that. And so it's okay to be grateful and content with the thing I have and also want to be a little better. And I can do
Yeah.
both of those. And I think learning to balance, that's the key for, at least for me.
Yeah. And that makes me think about it because I was listening to a couple podcasts you're on, Carl, about how you're having conversations with your daughter and saying, hey,
Yeah.
I'm not a pro at this. I'm clumsy.
Right.
And that it's okay to be
Right.
clumsy. It's okay to admit that. But the key is saying, I'll work at it, right? I'll continue working at it.
Yeah. I often remark to my wife, at least our kids will uh, have had me model
Yeah.
making mistakes, apologizing for them and trying again. Right. And I think with money conversations, particularly, you may say something like, that's none of your business, or don't be so spoiled. When you catch yourself, like, I think it's okay to just call it out. At least for me, it's been okay to say to my kids, like, hey, what you just saw was a clumsy attempt
Attempt.
at trying to do the best thing as I could for you as your dad. Like, I'm trying to protect you. And
Yeah.
and that was misplaced. Like, and I'm sorry, nobody taught me, is it okay if we just keep working on it? And I found my kids to just be like, yeah, dude, yeah.
Well, is it a trick though? Because you're one of the most foremost authorities on having these conversations, Carl. And you're even saying, hey, you know, I'm not even the pro at this. I don't think there is someone who's the best at this. And is because this is emotional, because I care so much about you, this isn't going to come out perfectly.
Yeah, totally. I think what I mean by trick is that the the even like technique or habit of
Yeah.
saying something, of calling it out and just being
Yeah.
like, I don't know how to do this. I'm clumsy at it. I do know people who are really good at it. Rabbi Shira Stutman, I had her on 50 Fires and she told a
Yeah.
story about her mom. And I was just like, wow. I mean, but her mom made a big mistake in the way she snapped at Rabbi Shira
Hmm.
and said, don't be so spoiled, or something about something that Rabbi Shira had said. But she came back, which was
Mm.
amazing to me. Like an hour later, she came back and said, hey, I'm sorry about that. And she said, and I noticed, I think the reason that happened is I was worried about it was in a taxi. She's like, I was worried about the taxi driver. And I was even noticing I was feeling some of the same thing.
Mm.
So I just think this is, and none of us know how to navigate it because none of us have been,
It's a lot.
it's been modeled, right? Like,
Yeah.
so I just think saying, wow, geez, I'm not sure where that came from. Sorry about that. How did that feel to you? What could I have done differently? And my favorite line, really, I find myself using this a lot, is like, hey, I don't know how to do this. This is going to be kind of clumsy.
Yeah.
I've even asked, like, can I have permission to ask a clumsy question?
Mm.
And I found it disarming and helpful and honest.
Yeah. I love it. Now I know you've been hinting at another book after going over a decade between books. You've been
Yeah.
hinting at a third one. I just wrote my first book and immediately I was like, oh, I got to write a second one right
Yeah.
off the back of doing one. Can you talk about that book? It's about reality of financial planning. Is that what you're talking about?
Yeah. I was surprised to find myself maybe just a week or two after the publish date, like getting up in the morning and writing. And I was like, what is that all about? And I want to write a book around, I thought it was about risk. And because I'm really curious about the landscapes we navigate. And I spend a lot of time sort of backcountry skiing and in the high mountains. And I've noticed a lot of the language we use up there applies to the language of entrepreneurship. And I've got a bunch of venture capital friends and a bunch of really creative folks running creative media businesses. And there's all this crossover in language, yet nobody really has tied it together. So I was curious about that. And then I realized it's probably more about the act of planning. Like, what does it mean to plan in reality instead of these? I just think it's so funny. We often think like the job of a plan is to build the most precisely correct model of the next 30 years. And
why was it 30 years? Why did they choose 30 years?
It must have been something
30,
like
five,
some life expectancy thing. That's actually a really interesting question. Why has it always been this like 30-year projection?
Yeah.
But the only thing we know for sure about those projections is they're wrong.
Wrong.
And so, but does that mean, so I went through this phase. In fact, I presented at a big conference in Denver where I was like, no planning. My second book, The One-Page Financial Plan, was actually a negotiation. I was like, no planning. Why do we have plans? Why do we have goals?
Yeah.
And then I realized, wait, no, the plans and goals are valuable for a very specific reason. It's the act of planning. It's this tension between, using really the thesis of this book would be that planning is about being less wrong tomorrow, not about being precisely correct today.
Yeah. And I mean, we're living in some wild times.
Yeah, it seems to only be getting more important. Like the reality of uncertainty. I think this is another piece that's really interesting. It's been showing up a lot lately. Like the youngs, right? 20, 30, even 40-year-old people saying, what happened to the predictable path?
Yeah.
Right? Like my kids are saying like, dude, there's no chance I can afford a house in where you guys live. And they can't even afford I went back and looked at our starter home. It's not far from us.
Yeah.
I went back and looked and I had our tax returns. So, this was like a year and a half after I was married, our first home we bought in this great walkable community. I was like, man, is it really more expensive? And I went back and looked. It was like, given our tax returns and the price of the home, we had to remodel the basement and turn it into rental. So if you include that rental income, our mortgage payment after that rental income, we needed to be basically in the median, the 50th percentile, the medium income of our county to afford that house. Now, same house. This neighborhood has not changed for 20 years. So the house is exactly the same. You need to be in the top 5% of income earners to afford that house. So there's structural changes that people are trying to get their heads around. It used to be that we had a predictable path. I think that was a temporary snapshot in time. Most of the time, it's very unpredictable. Well, how do you plan in that?
How do you plan?
I'm super curious about that.
Yeah, I mean, I think it's Investopedia says, the American dream's out of reach. It would take $5 million to have, a family of four and college education. So,
and to everybody listening that feels that, please know that's not something wrong with your thinking.
No,
that's not something wrong with your like abundance mindset.
Right.
There are structural reasons you're feeling that way. And the only solution really is just like, keep chipping away, keep chipping away,
Yeah. I love it. Well, this has been awesome here, Carl. Is there anything or any sketches that you want to talk about that we didn't touch on that might be for our audience?
Yeah. I mean, there's one line in the book that if I had to do, and I had these all memorized before the holidays and then I somehow forgot them on the holiday, but there's one line in the book that I'm looking real. Oh yeah. There it is. Number 29, when values collide. And the sketch is important to me, but the sketch isn't so important to me. This line, there's one line in the book that if I had to do this all over again, the only way to find this idea was to have written this book. And you know how that is. Like There's something about verbally processing thing that's really cool, but when you get one layer deeper and writing it, you're like, things show up that you learn things you didn't know.
Yeah.
And I would do this all over again for just this one line. And the line is that it's got to be in this one. When values collide, generosity, stable trade-offs, your deepest value. Oh, yeah. Yeah, it's on the second page of it. Often there's tension between competing values. And so this sketch is just a kind of a teeter-totter or a scale. It has the present and the future. But we could put other things in there like stability and adventure, paying down debt versus starting a business. Like there's no real solutions in financial planning. There's just trade-offs. And I used to always feel like those were at war. Like it literally lead to fights in our marriage. And my wife would say one thing and I would say the other thing. And I only recently discovered that this line in the book, your values aren't at war, they're in conversation. And that switch to me has really made a huge difference in our family already in the last 6 months. Because I could feel the war starting in my chest, just like, oh, and then I would think, whoa, whoa, whoa. This is tension keeps bridges up. Do you know what I mean? Like this is just tension between two very important variables. I can ask a different question like, oh, tell me more about that. Why is that important to you? Help me understand that. Can I tell you why this is important to me? And then almost invariably we find out we're kind of after the same thing. We were just taking different approaches to it. Like, I want to invest in a new business. You want to pay down debt. Well, what's the thing we're after is financial stability for the family. So I love the idea of saying, hey, can I take a deep breath when I'm feeling that like war starting? Generally, it's internally. Can I take a deep breath and say, wait, how can I turn this into a conversation?
I love it. Carl, thank you so much, buddy. If someone wants to get the book, what's the best way to do so?
Wherever you want, like Amazon, your favorite bookstore. My favorite suggestion is buy one from Amazon and one from your favorite bookstore.
You know what? I just watched You've Got Mail with my partner. She loves that movie with Tom Hanks and Meg Ryan. Yeah. It's back in the 90s, right? When there's serendipity. That wouldn't happen nowadays, which is sad.
Yeah, I haven't seen that in a long time. We were just watching Man from Snowy River, so that's a throwback too.
Oh, nice. Yeah. Awesome. All right, I'll put all the information in the show notes. I appreciate you coming on, Carl.
Yeah, cheers, Rory. That was really fun.
Thank you, buddy.
Opinions expressed by Rory Henry on this website, podcast, interview are solely their opinions and do not reflect the opinions of Arrowroot Family Office LLC or their parent company or affiliates, and may have been previously disseminated on television, radio, internet, or another medium. You should not treat any opinion expressed by anyone as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their opinions. Past performance is not indicative of future results.